What's up, everybody? Welcome to the Crypto Cheat Sheet News Update. I'm Brad, here with my co host Trey.
What's up? What's up?
Today is Thursday, March 29th, 2018, and we're going to break down all the latest news in crypto so you don't have to. Trey, it's been a hell of a week. We're down. We're down big.
Yeah, we talked about last week that 8K level was key, and we got back above it, bounced hard off that 200-day moving average, and it's been ugly ever since.
I think we jinxed ourselves talking about how it was our first up week since we started doing this show. So
That's
we're paying the
that's probably fair.
price. Oh man! All right, well let's talk news. There was actually a fair bit of decent news this week. First story that we have here is related to your favorite company, Coinbase. They announced that they are going to add ERC20 support. Not a big surprise here, right? These guys love Ethereum. Um, what do you,
Yeah, they have been heavy Ethereum, and is this good for Ethereum overall? Maybe, maybe not. I mean, like we were just talking about, that Bitcoin price is getting crushed. Well, Ethereum's getting crushed even worse. Uh, the bigger picture here is this is going to most likely legitimize several of the altcoin projects that are running on top of Ethereum. As opposed to just Ethereum. Ethereum's legit. Developers love it. Investors love it. It's not going anywhere. It's going to go through its ups and downs just like any other new technology. But the truth of the matter is, you get 0x Protocol or Golem or Augur, any of these big time Ethereum projects now being listed on GDAX or even just Coinbase custodial services. It really legitimizes the project. And I've certainly been as critical of Brian Armstrong and Coinbase as anyone over the last few months, especially after Bcash stuff. But the truth of the matter is, we wouldn't be where we're at price wise with crypto in general without what Coinbase did and creating fiat on ramps for cryptocurrencies over the years. So the fact that they're now moving into the altcoin space, pretty massive. And you can say they don't have a choice with Circle Invest and Robinhood and all these others offering it, but the truth of the matter is, Coinbase is still the king when it comes to this. And now that they're moving into the space, there's no other way to look at it other than huge news for altcoins.
Yeah, I agree. I think it was interesting the way they wrote this, though, because if you notice, they kind of it's kind of tiers, right? So they're saying Coinbase Custody. They're saying custody will likely support more assets than those that are available on GDAX or Coinbase.
Yep.
And then they say for GDAX, they're going to wait for regulatory clarity, before adding. So I could see custody adding just bukus of coins, and then GDAX
Sure.
would be next. And then they say, in I guess Coinbase itself, they say, if I can find it here, they say listing on GDAX does not guarantee listing on Coinbase. So it seems like they'll have more things in custody, and then less things on GDAX, and then even less things on the Coinbase app, which I think that makes sense.
It certainly does, and I think it's key to point out. Coinbase announced last week that in the last couple of weeks, that they are basically starting a custodial service setup, similar to what Digital Currency Group has done or Grayscale's done with Ethereum Classic, Ethereum, and all these. So they're basically saying there's three tiers. One is our investment platform where we safeguard your assets. We're the custodian for these assets, and we'll take your money, we'll invest it. I don't know, it's whether how you see fit or how we see fit, but somewhere in between there. The next level, you have GDAX, which is basically just Coinbase's version of an exchange where assets can be traded back and forth. And then ultimately, you have Coinbase, which is the fiat on ramps between crypto and, customers buying. And so currently they have Ethereum, Bitcoin, Litecoin, Cash, and those are the only 4 listed on Coinbase. And currently, I don't think GDAX has any more than that. I may be wrong on
No,
that.
it's the same.
Yeah, and so I think what their plan is like, all right, we may not provide fiat on ramps for everything via Coinbase, because via Coinbase you can just basically buy it and hold it in your Coinbase wallet. GDAX is more of like a Poloniex or Bittrex or Binance, and that it's an exchange where you can trade back and forth. And then, like we talked about, those custodial services, they can support basically anything because they don't have to worry about trading back and forth. I doubt they'll support anything, but they can support more in that without having to worry about setting up GDAX or Coinbase for it.
Yeah, makes sense. All right, let's go to the next one. We have the CBOE is encouraging the SEC to allow the Bitcoin ETF. So we've been talking about this Bitcoin ETF, feels like, for a long time. This thing keeps coming up and keeps coming up. And if you look at the actual letter, this is coming from, looks like Chris Concannon, the president and COO of the CBOE.
Yep.
And he's basically saying, hey, we've been operating these futures markets. Like, I think we're good. I think you can open up ETFs. Or at least that's the way I took it. What did you take away from this?
Yeah, it's probably not a perfect comparison, but I think it was similar to how back last year, SegWit was kind of the precursor for Lightning Network and a lot of these other upgrades to Bitcoin. So, or to the Bitcoin protocol. This is similar. Like, they've launched futures markets on the most reputable exchanges in the world, and things have gone well, depending on whether you're long or short, I guess could be questioned.
It's
but,
working, right? It's working
it's
fine.
working.
There's no like big glitches. Like, it's fine.
Exactly right. And so now, basically, trading via, options contracts and whatnot is really no different. If you open up ETFs, okay, people can put some of their brokerage money in there. And look, it's a volatile asset class. There is a very high chance that if you buy into cryptocurrencies, it's going to go way up and way down at some point, while maybe one, maybe the other, but if you hold it long enough, it will do both. So, sure, the SEC's job is to protect investors and preserve investor confidence. And so just throwing everything that comes along into an ETF, you can't do that. And it's understandable. But now that CBOE and CME have ran these futures markets and they have gone well, like, there's really no reason to continue to put off Bitcoin ETFs. And we've been hearing about Bitcoin ETFs since really 2013, 2014. People have been filing, and obviously, if you're the first one to market with a cryptocurrency ETF, you're going to get a lot of dollars in that with no competition, because you're the only one on the market. So there are multiple ETF applicants out there. I think over the course of 2018, we'll probably start seeing some of those get passed. And it's the same thing. Like, you put your money in it, it's just like putting it in a stock. A company can go bankrupt, or a company can figure out the next huge breakthrough and go way up. So it's huge to see CBOE's president going to the SEC and saying, guys, time for you to just drop this stonewall you've been putting on Bitcoin ETFs, let them through at this point, and let's see what happens. So again, bullish news, and we see that come out and price drops 35%. So
yeah,
kind of where we're at in the market.
But if this, if that did go through, you'd have to think that would be uber bullish for Bitcoin.
Yes.
If the ETFs happen, then
so, anytime you go through a bubble, and sorry to cut you off,
no.
There's an influx of money coming in that demand outpaces supply. Well, we clearly hit a point, where demand was no longer outpacing supply, and supply has now taken over. So in order to get that price to go back up, that's got to swing back the other way. And so There is a wall of money out there that is itching to get into crypto. Unfortunately, crypto is so early on in its technological maturity curve, for lack of a better term, that you can't expect the everyday person to go in and set up a cryptocurrency wallet and paste in their private and public key to send money and receive money back and forth. It's just clunky right now. There's not a UX that works. So an ETF basically takes that onus off of the investor, where you no longer have to worry about controlling your own assets. You have a custodian, a third party, who will take care of your safeguard your assets for you. And as soon as that happens, there is going to be a large flood of money coming into the crypto space. And it doesn't mean we're immediately going to see 20K and higher Bitcoin, but over time that demand is going to outpace supply again, and we will see price go up. We're going to have another
when moon, Trey. When moon.
When sir, target, sir. Yeah, it's you see all this going on, and it's again, like, we went from 3K to 20K in a few months. Like, that was insane. Bitcoin had never been over $1,200 before. And all of a sudden we break above that. We get up to 3, consolidate for a while, and we go 3 to 20 instantly. Like, that wasn't sustainable, very clearly. And you watch these markets right now and it's ugly. But as soon as stuff like ETFs get approved, where, how many have come up to you over the past year and said, how do I get into Bitcoin? And you explain it to them. They're like, no, thanks.
Yeah, well, it's tough. It's not easy. Well, it's I tell you what, it's easy. It's easy to get on Coinbase and load, or put Bitcoin in your Coinbase wallet. But if you have to teach someone like how to set up an actual wallet and do it on your computer, and teach them about your private keys and public keys and addresses and all this terminology, it's a lot to learn in one sitting.
Well, and beyond that, let's just say you, as an everyday investor, you have $100,000, you've been successful in life, you got $100,000 you want to put into this. You can't put $100,000 into Bitcoin via any of the exchanges right now. There are limits on what you can buy and sell as a new investor. So your only real options there are being proficient enough in the cryptocurrency space to be able to orchestrate an over-the-counter deal and be able to set up and maintain a wallet securely. And it's just, you're right. Like, it's not worth the time. Like, for someone who's been that successful, they're not going to go through all this and try and learn that. So once you have the option to say, hey, I want to put $1 million into this, all I got a button, there's going to be a flood of money come into this space when those are approved.
Yeah, it completely changes the dynamic for sure.
Sure.
All right, let's hit this third story that we're going to talk about today. I wanted to hit on, let's see if I can find the right story here. Here we go. So Monero, and Monero is doing what they're calling an emergency proof of work hard fork, because they're trying to preserve ASIC resistance. So Monero's been steadfast in the fact that, hey, you can mine Monero with CPUs. We're going to maintain a decentralized network, and you know what? We're going to fork, and we're going to continue to fight against ASICs. And so I thought it was interesting, because I think this hard fork, it comes up on looks like April the 6th. And so it's coming up within the next, 10 days or so. What are your thoughts on Monero and their stance on, changing their proof of work algorithm to fight these ASICs?
Well, a lot of these coins launched with this provably fair mining, where you couldn't dominate the network and spend a bunch of money and basically take over easily. Because if someone is willing to put the money forth and buy as new technology comes out, you could get an amount of hash rate in order to attack a network. And so we saw this with Siacoin a couple months ago, where Bitmain came out with ASICs for Siacoin. They threw all this, and they were very, very opposed to it. And when technology obviously advances and advances quickly, as you've seen with Bitcoin, like people used to mine tens of thousands of Bitcoin with a single computer, just a CPU miner. It's absolutely, if you turned on a computer and just let it run 24/7 trying to mine Bitcoin, you would never, ever mine a block, barring some magical stroke of luck. So what ASICs do is they basically take out this fair mining, and whoever is willing to spend the money, because they're not cheap now, is able to get a large share of the network hash rate, and in turn becomes very influential in the direction of a coin. Like, let's just say someone owns 50% of the hash rate on Monero. Like, unfortunately, the communities say doesn't really mean a lot anymore. It's kind of like, what do we have to do to appease the guy who could easily torpedo this entire project because he owns all the hash rate? And so, is it risky? Is it dangerous? Absolutely. Do I applaud the fact that they're trying to combat it? Absolutely. Will it be successful? I don't know. I mean, Bain, I heard, made about $4 billion last year. So unfortunately, if they want something to happen, they're going to figure out a way to do it.
Yeah. I mean, I tend to agree here. To me, Bitcoin's lost a little bit, I think, by having this system where, the normal person can't mine. You lose an aspect of decentralization. And that's what you're referring to. But, Monero has been fighting for this from the beginning, making sure that it's CPU only, and it makes it really difficult for you to, build a mining rig that's got, multiple GPUs attached to it. And it takes some of the gaming out of it in terms of, like, how can you build something that mines more than the other guy and can make money? I think the original vision from Satoshi for the way these systems are supposed to work is that every person would mine, and everybody would get a little piece of the pie. He probably didn't see pools and ASICs coming along. I guess you could have, if you really thought about it, if it got big enough, but I don't know.
Acquiring chip manufacturers and controlling the chip market. I mean, it's tough to foresee that.
Escalated quickly. So, in general, I think it's good. I mean, I think they're tweaking. I mean, it'll be interesting to see if they can pull it off, because, every person mining is going to go in and change the software that they're using, and the software's got to work, and everybody's got to update wallets. I mean, it's a big coordinated,
community effort.
Community effort, yeah. And then you've got, and I guess they're going to fork off naturally. Monero V, I think, is the name of it. Is going to fork off and stay. Or no, Monero V is... Yeah, I think that's the new one, that they're going to stay on the old proof of work chain or something like that. So naturally, someone's opportunistic and is going to try to take advantage of the fact that there's some amount of people in the community that are, against it. So,
well, I mean, you look at that, and you've seen it with plenty of these over the past year. There are going to be people with resources that see an opportunity to make a buck, and ethics be damned, they're going to go whatever path is the most financially prudent for them. And you can't really fault them. You can't really fault Bitmain for coming up with ASICs for this. They're trying to find new markets to get into, because most people have no interest in buying ASICs anymore for Bitcoin, because you can't compete with these mining farms. So
what's going to be interesting is to watch the hash rate on Monero, and see if because there's no real proof that there is an ASIC, right? I mean, they claim that it's just a potential. If there's potential that there's ASICs out there, so it'd be interesting to see if the hash rate, falls off considerably. Then, well, that's proof that there were, in fact, some kind of ASIC or something that was out there.
That or
mining
you see
on
the
it.
difficulty spike, really hard. Clearly, there was a lot more hash power thrown at the network. I don't know. I understand it from all sides. I mean, these are problems that we're going to see, not exactly the same, but we're going to see these over and over as the space continues to mature, just because everyone's trying to figure out their place in this and how to make the most money. I mean, these are actual businesses running in this, trying to make money, so can't fault them either.
Yeah. All right. Well, I think that's about our time here. I'm going to wrap us up. Visit our website, thecryptocheatsheet.com. Follow us on Twitter at thecryptocs. We're on Telegram talking Bitcoin, crypto markets pretty much all day, every day. And support our partner, Moonware, MEWNWEAR.com. Moonware. We got crypto gear. Trey's got a hat on from Moonware. I got this banner. Every day. All right, peace.